Welcome back to Money in Life TV. My name is Mike the CPA. You all know my sidekick Chipper.
Yes, sire. At your service.
What is up, my YouTube family? It is so good to see all of you once again. I love hanging out with you guys on YouTube, talking to you on YouTube, answering your questions, etc. And at this moment in time, this channel has officially broke 1,800 subscribers. Thanks to all of you. Thank you for all of your support, and the channel has now surpassed the total channel view mark of over 100,000 views. So I just can't thank you guys enough for all of your support, just for watching my videos and supporting this channel. It means a lot to me because I put a lot of time and effort into the videos I produce here. Now today, I'm really excited about this topic, and this is actually a subscriber requested topic. That's right, you guys have requested it. And the specific subscriber who has requested it, I need to give a shout out to her. Her name is Lena, and she has a channel called Stay True Vlogged, and I would highly or strongly encourage you guys to go check out that channel. Lena makes videos that cover money, budgeting, how to teach your kids about money, videos like that, and also videos that help teach us how to live a more positive and happier life. So I really enjoy watching her videos, and I think you guys will as well. So make sure when you get a chance, head on over to her channel and check out some of her content. And Lena, thank you for suggesting this topic, because we're gonna be talking about, I should say, this is launching a series of videos about how taxes work for YouTube. For most of us, YouTube is just a hobby, right? Some people just post a few videos here and there, and that's it. They never really do anything with it. However, there's a portion of people and creators on YouTube who actually want to run YouTube like the business it can be. And of course, when you have a business, there's tax implications, right? Especially as our channels start to make money, there's income to report on our tax return. There's expenses we may be able to deduct on our tax return to offset that income we're making from YouTube, sponsorships, product sales, whatever. I don't know about you guys, but I've always learned best when things are broken down for me in small bite-sized chunks. And so I'm going to be, like I said, I'll be producing a series of videos around this concept of YouTube and taxes. And just so you guys know, even if you don't have a YouTube channel, and if you have other small business of some kind, then these rules and tax laws are going to apply in pretty much the exact same way. So whether you have a different kind of business or you have a YouTube channel, the rules are pretty much the same. And so in this video in particular, we're going to be talking about startup costs. So, hey, what better way to start a series than with startup cost? Yeah, see what I did there? You know, these videos are meant to educate you and to help you better understand the tax laws and how they work, so that when you sit down to do your own taxes, or if you have somebody else doing your taxes, such as an enrolled agent or CPA, you're going to have a broader and better understanding of what's going on. Because as you guys know, when it comes to money, guys, or things related to money, you truly are responsible for knowing that better than anybody. Nobody can treat your tax situation, your money, etc. better than you can. So it's very important that we're knowledgeable about this stuff. Before we start talking about startup cost, in my hand I'm holding a Word document that I've put together from various materials and resources, and you're going to be able to find this document in the description section of this video. So make sure you go down there and check it out. You can download it through Dropbox. And if you have any trouble accessing this, just let me know, and I'll see if I can get it to you via email or another way. I've taken a lot of time to really put this document together for you guys, so hope you enjoy it. I hope you get something out of it. I really think you will, and I do encourage you to watch this whole video from start to finish, because I'll be showing some examples of amortization and other things later in this video. Let's go ahead and dive into startup costs, folks. The first thing is, well, what are startup costs? What officially counts as startup costs? Well, let me just read this off to you, and I'll show you guys on screen. So startup costs are expenses and costs you and I incur in the process of opening a new business, or the costs associated with acquiring an existing active business. So if we think of a restaurant, for example, right? Think of like McDonald's. So let's pretend we're going to open a McDonald's. Well, we have to buy the land, or lease the property, or construct a building. We have to install tables into that restaurant. We have all these things we have to do before we can ever open up that business to customers. Now, let's relate this back to YouTube channels, because I'm making this video, like I said, this is all information for small businesses of any kind, but I want to tailor it to be YouTube channel specific. So think of your YouTube channel like a business, all right? Think of all the things you have to do before you can ever post your first YouTube video, before viewers can ever come and see a video on your channel. So for myself, for example, I went out and I bought now different people are gonna buy different things, right? But for the kind of videos I wanted to produce, I ended up needing to go out to buy a new computer. I bought a cyber gaming PC because I knew it could do video editing. I also wanted to have a laptop that could do the same thing, so I bought an MSI laptop. And so then I also had to buy lighting equipment, I could buy camera equipment, and you can obviously spend as much money as you want, but these are all the things I had to purchase in order before I could ever post my first video on YouTube. So those are the expenses I'm talking about. Things you buy or you find to be necessary in order for you to post your first video and start that whole channel up, okay? And you might have to start a website. It all depends on what you're trying to do with your channel and where you're trying to go with it. But be thinking of those things, of what you need to start your YouTube channel. So startup costs are gonna vary drastically for each type of business, especially for YouTube. I've also thrown in some of the legal tax jargon into this so that you have a much broader understanding, probably more than you need, but I want you guys to have a broader and more in-depth understanding of this stuff so you truly know how to apply it to your specific tax situation. So for tax purposes, Section 195 defines startup costs as costs incurred to investigate the potential of cost of creating or acquiring an active business and to create an active business. To qualify as startup costs, the costs must be ones that could be deducted as business expenses if incurred by an existing active business and must be incurred before the active business begins. So basically what they're saying, guys, is these are the costs that must be incurred, okay? And if we go and incur these costs and then we never do anything for it, we never start a business, we never launch our YouTube channel, well then you're not gonna be able to deduct those because you have to have a legitimate business purpose for deducting those expenses. Otherwise, if not, then what are they? They're personal expenses. If we're not gonna treat this as a business, then all of that money we just dished out becomes personal and we cannot deduct it on our tax return. So keep that in mind. So let's look at a few examples of startup costs for a traditional business. And by traditional, I basically mean like brick and mortar kind of business. Then we're gonna look at specific examples of YouTube channel expenses that you might need to incur. So for a traditional business, guys, you might think of an analysis or survey of potential markets, products, labor supply, transportation, facilities, etc., advertisements for opening a business, salaries and wages for employees or that you have to train or instruct, travel or other necessary costs that you might have to incur before you can get your business off the ground. And you also might need to pay salaries and fees to bring in consultants to help you start your business, right? You might have to hire accountants, attorneys, things like that to help you get your business started. Now for YouTube channels, like probably 99% of them or more, you're not gonna have to incur those costs, right? That's the cost for like a brick and mortar kind of business. And usually, hundreds of thousands of dollars of expenses go into opening those kinds of establishments. But for YouTube channel, you can get off the ground for dirt cheap, probably even less than $1,000. You can start a YouTube channel if you really wanted to. There's tons of videos out there, just so you guys know, that you can find and use the most basic equipment to get started. So you don't have to spend a lot of money to start a YouTube channel. But now let's look at some of the expenses if we have a YouTube channel that might be considered startup costs. Okay, going down the list here, we have camera equipment, computer. These are things I mentioned just a little bit ago. Video editing software. In case you guys were wondering, I use Vegas Pro editing software for my videos, but other kinds of software packages would count as well, depending on what you're using it for. As long as you're using it for your YouTube channel and your YouTube videos, then I would, in my opinion, that would be part of your startup cost to help get you off the ground. Other things, TubeBuddy, so like that's an application that runs in the background of YouTube, vidIQ. These are things I personally use to help manage my YouTube channel and help give me a better picture of my analytics, what kind of search tags to use, etc. And then the last but not least, if you wanted to go really in detail, you could do consulting. You could pay for a consultant, right, to help you get off the ground. There's people on YouTube who actually do that, to specifically focus on consulting, helping other YouTube creators get their channel off the ground. You can pay for advertisements, things like that. So those are some examples of startup costs. So guys, when we think of startup costs, just remember, just think of all the expenses you might have to incur in order for you to launch your YouTube channel, okay? It's as simple as that. And as a CPA, I have to tell you guys, remember, it is always, and I mean always guys, your responsibility. It's our responsibility to maintain proper receipts and records for any of the expenses of the startup costs that we're incurring. So if you do not have receipts for these kind of things and you and I get audited, we're out of luck. We're gonna be in hot water because we're not gonna be able to prove that we actually spent that money. So make sure along this whole way that you're keeping track of your expenses for your YouTube channel. Okay, so we just looked at what startup costs are deductible. Now let's talk about what startup costs are non-deductible. Things like this. So we have deductible interest. So if you have interest that you incurred in order to spend this money for these startup costs, it's not deductible. Taxes, for any reason, if you pay like sales taxes and things like that, not deductible. Research and experimental costs are not part of startup costs. Now, it doesn't mean you can't deduct it. There's actually a lot of rules, very specific rules for startup costs in research expenses. But usually research costs are capitalized, and I'm going to include a link to the publication on this. And generally, you'll see as I wrote here in the document, research costs are generally amortized, but see IRS Publication 535, Chapter 7 for more detail on this, because there's pages and pages and pages of information on research costs and experimental research costs. So just keep that in mind. All right, so we've been going along this video, we're talking about some examples for your YouTube channel and startup costs of what you can deduct. But is there a limit to how much startup cost that the IRS will allow you to deduct? And the answer is yes. So the way startup cost deductions work is we're only allowed to deduct $5,000 of our startup cost expenses up to the amount of $50,000. Now, Mike, you just said that I can only deduct up to $5,000 of my startup expenses. Well, what about the rest? What if I spent like $35,000 or something getting my business off the ground in order to get started? Well, don't worry, you're not out of luck because the remainder of that can be capitalized. And I've included in the Word document that you guys can download a step-by-step example of the concept of how that actually works with the amortization rules, etc. But let's go ahead and let's take a moment and let's walk through an amortization breakdown on screen for you guys so you have a better understanding. Okay, let's look at an example on screen. So let's say we have $35,000 of startup costs, and hopefully you guys can see this. So of the $35,000, we know we can deduct $5,000 of that, right? So that's gonna leave us, so we're gonna subtract $5,000 from this. So now we have $30,000 of remaining startup cost. The remaining $30,000 we need to amortize because the IRS does not allow us to expense this all at once on our tax return. So amortization rules state for startup costs that we have to amortize this over a period of 15 years. And in case you're wondering, 15 years is 180 months. So from an amortization perspective, this is how it's gonna work. So now we're gonna take our $30,000 I just mentioned, and we're going to divide it by 180 months. Because we would have to expense this over that time period. So 180, or 30,000 divided by 180 is basically $166 per month. It's like $166, $167 per month. So basically every month that your business is open, you get an amortization expense of that much per month. And it keeps going on and on and on until the 15 years has passed. Then that full $30,000 of startup costs will be expensed at that point. In case you're wondering how this plays out, if you were to open your YouTube channel, let's pretend on the very first of the year, so January 1st of 2018, the way that would mathematically compute is we would get our $5,000 deduction of startup costs, right? We can deduct the $5,000, and we would get an amortization expense deduction of $2,000, which is, the way that's calculated is we know we can get $166 basically per month, right, of amortization expense. So now we just multiply this by 12 months. So this amount times 12 roughly gets us, and I'm just rounding here, guys, just for simplification purposes. And you're gonna see this example in the Word document I've provided you. But that's gonna get you a total amortization deduction of $2,000. Okay, so your total amortization expense deduction is $2,000. So you have your $5,000 of startup costs, and we have our $2,000 of amortization expense. So we have a $7,000 tax deduction right there. I went over that kind of fast without going into crazy amounts of detail of all the amortization rules, which I don't want to get into, but that's essentially how this works. If you guys have questions, comments, please feel free to drop them in the comment section down below, especially if I lost you at some point, which is highly possible because tax is not the easiest concept to teach, but hopefully you guys were able to follow that, but I'm happy to answer any questions you may have in the comment section below. So we've looked at what are startup costs, we've looked at examples of startup costs for our YouTube channel, and now we've looked at how amortization works and how mathematically it all plays out. But now, where do we actually deduct it for tax purposes? Well, in this video, I'm assuming that you have not formed an LLC, a corporation, an S corporation, or any other kind of business entity. So if you did not legally form an organization with an attorney, then that's not going to be the case for you. And that's probably going to be the case for the majority of you. When you're first starting your YouTube channel, there's probably no need for you to incorporate right away. At least I have not at this point, because I'm just getting started. Once you start making hundreds of thousands of dollars or more, if that ever happens, well then I think you have a reason to actually form a legitimate business for your YouTube entity. But until then, you're fine running it as like a sole proprietor, which is a tax form Schedule C. Schedule C tax form is part of the 1040 tax forms. And so I'm going to show you an example on screen. I actually got this from another website, so check it out. And it shows you roughly where you might report these $5,000 in deductible startup costs on your return. Now, amortization expense is going to be placed on a depreciation schedule within your tax program or tax software. So make sure to know that's where that goes. And then that software should transfer that expense amount to a line item on tax form Schedule C. Now, like I said, I'm not here to tell you how to file your taxes. That is not what this video is intended to do, but that is essentially how it works. Okay, guys, that is all the information I have for you today. Hopefully, I've been able to explain startup costs in a way that makes sense to you. Let me know how I did. I hope you were able to follow that. Coming up in future videos for this series, I'll be showing you how to easily track your expenses with Microsoft Excel. And I can also recommend some software packages you use if you want to use software beyond just a normal spreadsheet. We'll be looking at understanding tax form Schedule C. We'll look about how, if you were to receive income from Google, which is Google owns YouTube, in case you guys didn't know, we'll talk about how that income is actually deposited to your account and how that's reported to you in order for you to report it on your tax return. So we're going to be going over a lot of different concepts as we go down this path. So if you want to learn more about taxes, more about finances, more about investing, then I would highly suggest that you guys subscribe to our channel. I work really hard to produce these videos and make them as detailed as possible. Like I said, I have the handout for you in the download section down below, so make sure to download that, read it over, and that's gonna really help you understand everything we just talked about in the video. And then there's tons of links in there for you guys to show you where exactly I got all this information and where you can learn more about this for yourself. Because the more we know about our tax situation, not only it's going to help us better from a global perspective when it comes to our money and finances, but also for how you want to run your YouTube channel. Because your YouTube channel, if you use it right, can definitely grow into a business model. And in fact, it can grow into a very profitable business model depending on how you want to use it and grow it. It's totally up to you. All right, guys, thank you so much for taking time out of your day to watch this video. Chipper and I love hanging out here with you on YouTube. I hope you guys have a fantastic week. Let me know if you want to see more content like this. Once again, Lena of Stay True Vlog, thank you so much for suggesting this topic. I had a lot of fun kicking off this series, and I can't wait to make more videos in this area. And just remember, this is not only the rules for YouTube, but just for small businesses in general. The rules are the same. Different businesses deduct different things, but overall, the rules are pretty similar for each kind of business. So that's why I think this would apply to almost any business you're thinking of starting. All right, guys, like I said, thank you for your time today, and I had a lot of fun making this, and I hope to see you in the next video. Love y'all. Bye, guys. Peace.